Good afternoon, everybody. Welcome to our proactive risk strategies for staffing companies in the changing political, social, and financial climate. Today, you're going to be hearing from a host of individuals. Claudette Kuntz, who is a staffing industry consultant with CC Advisors Group. Jamie Kozerowski, hopefully I said that right, Jamie, who is with the Huttenlocher Group, and then Kathy McLeod, who is also from the Huttenlocher Group. And then myself, Jerry Grady, a partner with UHY LLP. You're going to hear from the three different groups on a host of different information that we felt was important to share with the staffing industry, that things that we're seeing in the new climate with the changing pandemic rules, with the work from home, the insurance, workers' compensation, commission structures, all these things is what we're seeing right now in the industry. And we felt it would be good if we just got people on to give everyone kind of what they're seeing and what they're hearing. So with that, I'd like to go ahead and start with Claudette, and she will go ahead and start the presentation for all of us. Claudette?
Thank you, Jerry. Appreciate it. I am so pleased to be here today. I chose to talk about operational excellence as it relates to risk because it is more topical today than ever. The best-in-class staffing organizations are implementing roles and have dedicated resources inside of their organizations to really choose this as a risk mitigation and cost avoidance topic for their organizations. So I think it's a real important topic for us to be talking today on. And if you'll advance the slides, Jerry, he is our driver of all things slides today. We can pass this one on too, because I believe this one was on the website. But just a little bit about my background. I grew up in staffing, 25 plus years. 21 of those years was as a part owner and operator of a technical staffing firm headquartered out of Dearborn, Michigan, which is near the Detroit market. And I do know there are a couple of folks on this call that I knew from that industry way back when. So I experienced something really exciting, which was double-digit growth for 10 straight years. And it was really an exciting time to be in the industry, but it was also a time where it was transformed from direct contact with management to MSP, which completely re-engineered our service delivery model and gave us opportunities that were just very different. If we could advance, please. All right, so the way that we transformed as a smaller organization, and I do know that there are smaller and mid-sized organizations represented today, is that we were forced by a client of ours in the automotive space to become ISO certified. If you're familiar with ISO standards, International Standards of Operation at all, you'll know that it is a painstaking audit process to actually pass and become ISO certified. But we were forced, this was our largest customer. But what it did is it forced us to look at process improvement and our overall operation. And by doing so, it actually gave us the structure we needed to leapfrog into growth. So one of the most important things that we can talk about is how we mitigated risk inside of that space and what we did structurally inside of our organization to really meet those needs. And if you could advance from there. Thank you. Let me just define operational excellence for just a moment, because I think it's such an important topic. Next slide.
Oh, sorry.
You got to be on it, Jerry.
I know.
Yeah, so the philosophy of embracing problem solving and that leadership is absolutely key to the continuous improvement. And so constantly taking a look at your internal operations. How are we doing things? How can we improve them? And how does this impact us as an organization long term? And so by structuring it, certain departments, certain roles, the way that we were forced to through ISO really helped us in that cost avoidance space and that risk mitigation, because as you know, it just takes one bad incident and your costs go up and it's just not a good scenario. So if you could flip to the next slide. So some of the common themes I know about having consulted for the last 3 years inside of the staffing industry is that staffing professionals want to win, and oftentimes they want to win at all costs. Well, all cost now changes, right? Because the climate has changed. We are all needing to adapt to this new COVID environment. And so risk and safety are top of mind for so many organizations, and staffing and support of those organizations needs to be really mindful of how we operate and the practices we're putting in place, not only for our own organizations, but for our contractees that are going to sites that should be safe. So doing on-site surveys and talking to your customers is more important now than it used to be in the past. It was always important, especially if you're in that light industrial space and other areas that require a little bit more risk from a job description perspective. Next, Jerry. So not a popular solution, but here's what I recommend for anyone who is just running so fast. And that first bullet off to the right, it couldn't be more true, is that, you know, staffing industry in general, it's a race. We're constantly underwater with the number of activities and tactical things that we need to do throughout the day. So it's not popular for me to say inside of a staffing organization that I am consulting with, you've got to slow down in an effort to speed up. And where customers of mine have taken the opportunity to slow down, do some really deep thinking about strategic planning, about operational structure, how do we point the right resources to the right issues that we're dealing with? How do you put the right people in place? And do you have them in-house, or do you have to recruit them and bring them in? These are all really great questions, but I tell you, I am met with resistance at every step when I say we need to slow down and we need to plan. If you want to win, which every staffing professional I know wants to win, you've got to sit back and think, how do we structure this so that we're poised to win? And what kind of exercises, whether it's strategic planning or other activities inside of your organization, to slow down so that we can plan for the win. And it really has helped organizations inside and out with both customers and internally. Their teams tend to be more focused and really focused on the right activities, because as you know, we can spend all day on activities, but are they really productive activities? And that's really the difference. So again, it's not oftentimes we don't have enough time in the day. We need to assess the harm. And if we are ignoring certain process improvements, you know, how harmful is that to your organization and to the people inside of the organization? These practices are really important today. And I'm offering you a challenge to go change it. And if you need some structure around that, let me know. Next, please. So common mistakes is that staffing firm leaders don't study their own internal data. Data is something that is so important. We just don't slow down long enough, again, because of that race to really study what is inside and what is important to study. And it's taking things like, especially from a safety and risk perspective, your largest customers. Have you sat back and asked your accountant or CFO to do a P&L by customer? I have so many clients that have legacy customers. They were with them from day one. They helped launch the company. They've just done tremendous work. But when they sit down and do a P&L, they actually find out that they're losing money, and they're applying all these resources to support this account. But because of legacy rates, this is just not a profitable venture anymore. And then our emotion comes into play, where we don't want to let go of our first real account that helped us to grow, but really take a look at, especially from a risk perspective, you know, what do you have on the table? Studying your data, studying what it is that that is important for you to look at, and remove the emotion. It is one of the hardest things for staffing firm owners to do, is to remove the emotion from making these kinds of decisions. But it's, if you're looking out for your business first, you really have to take a look at deeply the data and do a P&L per customer, and only for your top 5 or 10, depending on how many make up that majority of the revenues that are coming inside of your organization. You need to shed those non-profitable businesses, the high-risk businesses, and those unrealistic customers that tell you that we can't increase bill rates even in today's climate, which is remarkable to me. We can't find enough workers is what I'm hearing from a lot of light industrial and commercial clients. They're just being paid to stay home and we can't find enough. So what do companies have to do? I assist staffing firm clients to becoming the employer of choice. And there's a whole strategy around that. And it isn't just about pay. It's about a lot of things. If your clients aren't responding to your submittals in a timely manner and you're losing them to either the competitor or one of your other customers, you need to sit down and have those hard conversations with your clients. They're just moving too slow, especially on the high tech side. They used to have the luxury of waiting 2 or 3 weeks before giving us feedback or scheduling interviews. That is no longer the case. While you're sitting thinking, these individuals have 2, 3, and 4 offers that they're considering. So moving quickly and helping clients understand how they become the employer of choice is a really good conversation to have, and there's a real strategic positioning that you can take. And at the bottom there, I said, yes, this includes your legacy accounts, the ones that you're so comfortable with and have a great relationship with, but are they really profitable? Are they causing too much risk? Sit down and do a review, slow down to speed up. Next, please. So point the right resources to the right opportunities. I've consulted with a number of companies where they have a foot in the door, but they're just not pointing the right amount of resources in order to grow those accounts. And they're really good accounts. You still have contact with the managers directly. It's not through an MSP. And I have mixed feelings about MSP, and that's a whole hour presentation that I won't go into today, but really important for you to take a look at where the low-hanging fruit is, point the right resources at the right accounts at the right time, and I think you'll see growth and winning in a big way. So if you haven't done that yet, or you haven't taken a look at, okay, strategically, where are the accounts where we've got our foot in the door, we've got master contracts, we've got good bill rates, we've got lengthy time of assignments, then, do we have enough people inside the organization pointed to win those accounts and grow them in a big way? And you can grow them organically. So step back. I know staffing firm owners are really good about working in the business and not on the business, and taking a 30,000-foot look down on the business and what do you see? It's really important for you to have a clear mission and vision. Employees really need a couple of basic things when you're managing a team. And one of the things that they need is they need to know that the work they do matters and that the work they do is actually impacting the organization. So if there are ways that you can communicate that to employees as you're making shifts inside and pointing resources to the organization, you're going to have to share with them what that mission and vision looks like and the purpose for their roles and how important a role they play inside your organization. The human side is so important. It is just so important. And taking a look at, the low-hanging fruit. If you would, Jerry, next.
Yep.
Thank you. Leaders do not grow their business. They may when they first open their doors, but they grow people so that they grow their business. And as I just mentioned, people are such an important part of any staffing organization because it is all about the people. We are in the people business. And so staffing firm owners work so hard inside of their business. But I would challenge you, if you're a leader inside of your staffing firm, to grow your people. Let them skin their knees. Let them make mistakes. That's the way that we grow and learn. And there was a lesson I learned a long time ago. I love to study the psychology of people, what makes them tick. And one of the things that I learned was, as children, we're like sponges. We learn because that's how our brains are wired. We're just input, input, input. If you'll remember that movie with data, data, data. But as an adult, the biggest lessons we learn come with pain. So if you think about some of the lessons you've learned as an adult and how painful they were, you will never repeat that mistake. But so if we don't allow our staff members, we just hold their hand through every process, or we insist on handling it because it's just too important, we don't help our people grow inside. So I know we're running into a few minutes left for me. So why don't we advance to the next slide, and I'll get through these rather quickly. All right. Remove the toxic people. Holy cow, I can't tell you how many staffing firms I've talked to that have a bit of toxicity inside of their organization. It usually stems from one or two people. And if you don't take a strong position, you'll be perceived as a weak leader. So please take the initiative to remove that toxicity right out of your organization. Next, please. All right, performance metrics and KPIs. If you don't have those established inside of your organization, I was taught a long time ago, if you don't have a goal, you don't grow. So setting clear metrics and goals and KPIs for your staff is very important. Next. And all of the above help you to win. And I know that's important for staffing firms. And next.
That was the last slide, Claudette, for you.
Oh, I thought I had a great big thank you. Okay, so I'll just say it. Thank you so much for having me today. This has been great and I appreciate it. I am a staffing firm consultant, but I am working full-time at the moment with care.com. They needed to grow and train a sales team because they've doubled and tripled revenues in this last year. So if there's anything I can ever help you with, please let me know. And with that, I will turn it over to, I believe, Jamie and Kathy.
Yep. Yeah, I do want to just add one comment that Claudette, I think you really hit the nail on the head on two very important things that I've seen in staffing firms. One is the actual ABCD of their clients and their legacy clients. There's been so many times where we've seen clients who think because they're doing 60, 70, 80 million that, you know, they're great. And then as you break down their customer base, you find out that their legacy customer is actually sucking all their profit out. And then they lose that client, or they decide to raise the price and the client leaves and they find out they're actually making more money at a lower volume because of what was happening. So I think that's an important note that you did bring up. And then I do think that the people, I think your aspect on all the people in the transition and the change and all that you talked about is outstanding. It really hits home with where we're at today, especially with trying to find good people to work. So really nicely done. I appreciate those comments you had.
Thank you.
Okay, we are now up with Jamie and Kathy to talk a little bit about all the insurance considerations that are happening in the marketplace. And I do know this is a hot topic, Jamie and Kathy, because I'm hearing it from a lot of our clients right now.
All right. So this is actually perfect that Claudette went first and we are coming second. In reality, she kind of gave you some of the how from a leadership level to do exactly where our presentation is going to go. We're going to talk a bit about the market, but then also boots on the ground, real everyday activities that people need to be doing. We've been hearing, you know, for the last year that these are unprecedented times. And you're hearing that from all of your trusted advisors. You're hearing it on the news in the morning, and they really are. And that's even truer for insurance and risk management. Just a real quick background. Kathy and I fell into staffing over 15 years ago. We won't get into who's been, you know, here longer. But we fell into staffing because we were workers' compensation experts, and we realized that while there were some specialty agencies around the country, Chicago, Florida, there was nobody focusing on staffing specifically here in Michigan. Can you go ahead to the next slide? So what I want you to think about, a lot of times people hear the term risk management and they think insurance, and that's really kind of not the case. Insurance is just a funding mechanism for part of your risk. So if you consider all of your liabilities, and I'm not just talking get sued liabilities, I'm talking loss of assets, loss of tangible, intangible property, your reputation. If you think of all of those things, even the unforeseen profit, and those were some of the examples Claudette gave, you know, getting rid of your legacy clients that aren't necessarily profitable. If you think about all of those things as a cake, then the goal when thinking about insurance is that's the piece of the cake that you can transfer to insurance. Everything that can cost you money or keep you from getting money is the whole cake. How much of that you can transfer is just a small piece. The rest of it really depends on you. The Post-it diagram that we used first is really because especially for your mid-sized staffing companies, you're very focused on, well, right now recruiting because it's so hard to get labor, but also sales. And you kind of have random risk management thoughts that happen throughout the day that you should really tackle, and they end up on a to-do list, kind of like mine, on a yellow pad that you're going to get to later kind of situation. But you have to think about what can you do to keep you from losing pieces of your cake and make the piece you can transfer to insurance bigger. An easy way to think about this is employment practices liability. If you're a mid-sized firm, your deductible right now is probably about $25,000. With the market conditions, and if you have no risk management principles, those deductibles are actually going to start going up. So the amount that you can transfer, your piece of cake is getting smaller and smaller, and it's costing you more and more money. So we're going to go through some very real logistical, cross it off the to-do list items. But first, Kat's going to jump in, talk a little bit about the insurance market and what's happening and where we're going.
Yeah, I'm going to start in more general terms, and then Jamie's going to get into a little bit more detail. But I'm sure most of you have heard of the terms a hard market and a soft market in the insurance world, and it's been very cyclical as long as we can look back in history. However, the last 10 years or more than 10 years, we've been in a soft market cycle, which is obviously very advantageous for businesses. However, that's all changing. We're now moving into a hard market, if we're not already there with both feet. There's signs. There's signs that show us that the hard market is here and that we're going to be in it for the foreseeable future. And it's not just the economy. One of the biggest factors is the reinsurance market. We look to the reinsurance market to see how they're reacting. And the reinsurance market right now, their role plays a big role in the determination of rates, how much capacity they're willing to take on, and also the appetite, what markets they're willing to look at, as well as claims that are paid by the reinsurers and the insurance carriers. So we look at all kinds of factors. We look at the wildfires that have been out in California. We look at civil unrest that's happened in different pockets of the country, as well as losses because of COVID. So when we look at those claims that have been paid by carriers and reinsurers, we have to realize that those claims and those costs are being spread out amongst all policyholders, not just those in the affected areas. So, what happens in California is actually really having an impact on what's going on in Michigan or in, surrounding Midwest states where we don't have a lot of those big wildfires and such. So similarly, in the EPLI and D&O market, which Jamie talked about the EPLI a little bit, in that world, the rates have been affected by increase, not so much the type of claims, but the frequency of those claims. So wrongful termination, wage and hour, retaliation claims, the Me Too movement. So, as well as COVID, we've seen how that uptick has resulted in increased premiums, or is starting to result in increased premiums, increased underwriting considerations, more stringent underwriting practices, as well as carriers are starting to shrink the market that they're willing and the risk that they're willing to take on. So you're going to hear Jamie and I preach, because we do it all the time, over and over again about the importance of making your company look attractive. And that goes hand in hand with some of the things that Claudette talked about as well. The underwriter is the one that is making the determinations on your pricing, as well as the coverages that they're willing to offer. And so that picture that we paint as agents and you as business owners is really critical to what kind of pricing and coverages we're getting. Next slide, Jerry. Okay, so this is just a snapshot of the fourth quarter of 2020 and the first quarter of 2021. So as you see, all the projections are up. We don't expect that that's going to change anytime soon. There's a lot of uncertainty in the insurance market, and so this is, it's basically a direct result of the claims and the impact that those claims have had on capacity and rate. So if you think about the things we just mentioned, the civil unrest, the wildfires, natural disasters, the Me Too movement, all of those things. And then they are compounded with the pandemic. So as a result, claims have been put into a holding pattern in a lot of cases, especially when the pandemic initially started. Everything was shut down. So we saw that, depositions were basically canceled. Trials were put on hold, settlement conferences and arbitration hearings were canceled. They were rescheduled again. Some are still in the throes of being rescheduled. But we'll talk about that again in a minute. But one of the things you might notice on that screen, on that slide, is the workers' comp is not shown there. Workers' comp is a little bit different. Obviously, it's one of your biggest insurance expenses, so we definitely want to make sure we talk about that in detail. As most of you know, rates have been very flat over the last 10 years, and we've seen reductions in a lot of cases and in a lot of codes. COVID's likely to change that, but unlike some of those other lines of business that we were just talking about with the general liability, the D&O and EPLI, the workers' comp is going to lag behind a little bit. But don't be shocked if you see down the line that there is an impact, and that impact is going to be primarily as a result of COVID. Surgeries for workers, if we're talking about workers' comp claims, so surgeries were put on hold. Magistrates weren't hearing cases. There was a backup of hearings. Now we've got all these new claims that are happening. They're trying to work those into an already overburdened system, and all that's doing is causing a lot of chaos. So backlog. There's the word I was looking for. So basically, what you're going to see is that it's going to eventually wash out. It's going to wash out in the base rates going up. It's also going to show in your experience mods, unfortunately. So most of you are familiar with how your experience mod works. You're looking at a 4-year window, not including the most recent year. So when we start to see the full effects of what COVID's done is going to be likely a year from now, when those claims start to have some effects on those experience mods. So it's really incumbent upon you as business owners and us as agents to make sure that we're checking your work comp experience mod worksheets, that in those cases where we can file aggravated inequity claims, that we are doing so. Some states don't allow it, but Michigan does, and it's critical. It will help manage those experience mods.
All right, next slide. And I will try to jump through this so that we stay on track for time. Obviously, our contact info is on these slides, so people can always reach out with questions. But this slide in particular is our wheelhouse. And, Kathy and I often joke, we're risk managers who happen to make their money by commission on the insurance products that we sell. But the bulk of what we spend our time on is right here. So again, thinking of liability as anything that can cost you money or keep you from making more money, here are some real boots on the ground ideas. And the first is contractual. Again, we talked about the fact that you have to be an attractive customer. We've also talked about the fact that with fewer and fewer people in the staffing market, I mean, we just saw a major MGA sell off their book to a competing carrier. The number of people that will do work comp for staffing companies and the number of carriers that will do the other lines of business for staffing companies is shrinking. And as it shrinks in this hard market, they are looking more heavily. Whereas 2 years ago, 3 years ago, 5 years ago, I would be asked to submit a sample contract of a staffing company to the carrier. They now want to see the client's top 5, top 10, and what they're looking at is what you agreed to. For instance, I as an agent hate the words any and all. So many clients, you want the business, you sign a contract that you agree to any and all. I'm going to jump over transfer for a minute and talk about negotiate. Depending on your size, you do have the ability to at least ask to change part of a contract. What we see so many times, especially in the light industrial space, is you are signing or getting a contract from one of your clients that they give to all of their vendors. The same person that put an addition onto their plant signed the same contract that you are signing. And it's going to be imperative that you negotiate to make it more attractive, or consider things that, as Kathy mentioned, capacity is down. If you are a smaller staffing company, mid-sized staffing company, and you're being asked to provide a $25 million umbrella, a $15 million umbrella, those are things you need to consider now. Because if your renewal, for instance, your insurance renewals in December, come December, you're going to be shocked to find out how hard it is to get. You won't even find one carrier to give you a $25 million umbrella. You're going to have to layer it, and the cost is going to be substantially more than what you're paying now if you already have one. Those are conversations as you get these new contracts you need to be having with your agent. So trying to negotiate many times you can, whether it be limits or whether it be types of coverage. Cyber is another fun one that I have. Cyber is a first-party coverage. If you have a cyber policy, it only covers you, yet you'll see many banks, especially, require staffing companies to have cyber. Transfer is another thing that is going to make you attractive, keep your liability low, and also have more carriers be vested and interested. There's a large staffing company that is handling things right now with multiple people in the industry where they don't take the auto liability. If somebody's going to drive, you just transfer it out. Employees and customer, again, about looking attractive to insurance companies. You know, any attorney out there for $1,000 will review your handbook and make sure it's up to date and compliant. You need to make sure your updates are on there. You need to be defensible on the stand. You need to be attractive to the carrier. Independent contractors, I don't want to spend a lot of time on because in staffing, it's here or there. But with the way that Michigan in particular and multiple states with the Biden administration are playing with this IC, try to negotiate to do a placement and not be responsible for that IC. It's just going to hit your work comp later in most cases. And the last thing I want to leave you with is for your customers, make sure, depending on your size, you're out there all the time at your customer site, but make sure that somebody is watching the sales department and seeing what those places are really like, what that customer's website looks like, what they say they do versus what they say they want you to do for them, because the underwriters are looking, and they're really looking now. And you don't want to have your entire operation vetoed because of one client you have with one piece of business. Again, that goes to looking at your spread. Is it worth it? Is it worth it to have one person do this or 5 bodies do this to negate coverage for you for your entire organization and limit how much of that piece of the cake you can transfer? Next slide.
Okay, this is just a few of Jamie and I both have our favorite websites that we like to refer to, and these are a few of them. Obviously, my OSHA right now is critical. If you're not signed up for their automatic news alerts, I would highly recommend it. I get something from them every day. They're not always as great about updating their website as they are about sending out those news blasts, so I would recommend that. The Federal 20, Jamie alluded to, for the independent contractors. And then we have SHRM for a lot of additional HR information. But one thing we didn't list on there, and we absolutely want to make sure we plug, is the American Staffing Association. You know, the number, if you're not a member, the amount of resources that are available for members of the association is limitless. From an educational standpoint, to their daily message board, which I read on a regular basis, I'm sure many of you do as well, that's talking about topics and issues and concerns that people are having on a day-to-day basis. Jerry and Claudette are regular contributors on that site too, and so I just think it's invaluable. So that's it for us, Jerry.
Okay, well, thank you so much. Couple quick points I did want to make on here is that workers' compensation, that's one of the things we've been hearing about, is the joining of two forces, shall we say, or was it the joining of somebody to own the marketplace?
Yeah.
You know, I don't know which way it really is, but it does have a little bit of concern for me, because I do believe workers' compensation, as low as it has been, I really think there's a day of reckoning coming for the staffing industry. And I think, you know, that's going to tie back directly to what Claudette talked about. Now you got to start looking at your margin for your customers, seeing, do you need to go raise prices? Unemployment that's popping up, what's going to happen? Is that going to mean more people will file workers' compensation claims? And then, like you said, the judges have not been hearing cases, and what happens when they start hearing some of these large COVID cases that we all know are going to start coming sooner or later. So good stuff, guys. I really appreciate you giving those insights, because I think it's something clients don't necessarily focus in on all the time, is the insurance. And staffing firms have two things: people and insurance. That's their cost.
Yeah.
All right, so now the boring part. I always like to, these guys, Claudette and team here did a great job. You guys really did a great job of leading on how we make sure that people are looking at their profitability, increasing their revenue. Well, our idea here is that we want to make sure that people are aware of some of the changes that are coming down the pipe. Now, I have a lot in here. I'm not going to go through every slide, but we did want to give everybody the ability to understand what's been discussed and what's been happening. There is a lot that's happened, and let me get through some of these other slides. You can read all this at your liking. We had a past legislation that just got done, which was called the American Rescue Plan Act. It was another $1.9 trillion worth of dollars going out. And then they've started in on the new proposed tax legislation that's starting. One of the biggest areas that I believe that all staffing firms out there truly need to understand right now is the employee retention credit. The employee retention credit is one of the largest free dollars to staffing firms out there, besides the PPP money that you hopefully all received, when we hit the pandemic. The employee retention credit actually was set to expire in June of 2021, and the ARPA extended it through December 31st, 2021. And when they did that, they also increased the credit that you are allowed to receive on one individual employee, where previously it was $5,000 total dollars. It is now $7,000 per employee per quarter. So when you do the math, you can see that that becomes a very large dollar amount for a staffing firm, that you're able to get a $7,000 employee credit per quarter that is refundable through your FICA and Medicare taxes that you're paying. Now, it does add some new provisions for some of the severely financial distressed businesses, that they did come back and say that if there was a reduction in gross receipts of more than 90% during the quarter as compared to the same quarter in 2019, you automatically qualified. That is huge, because a lot of people have somewhere between 50 to 60% of a reduction in gross receipts. So we are seeing a lot of staffing firms out there that originally we did not think were going to be getting this credit are now starting to get this credit. So as I talked about, for 2020, there was a limitation that you could not have more than 100 FTEs as of 2019. So if you had under 100 FTEs in 2019, you qualified for the retention credit in 2020. And that retention credit was capped at $5,000 per employee, and it was limited to 50% of your wages. For 2021, they raised the limit. And this is where we're seeing a lot of staffing firms being able to take advantage of this, is because if you had more than 500 FTEs, then you're out. But if you had less than 500 FTEs in 2019, you are in the mix now. And when I say in the mix, what that means is that if in 2020, in the fourth quarter, you did suffer some of the reductions that qualify you for this credit, that means the first quarter of 2021, you also are able to claim the credit. So it's important to note that that can happen. So these are just some quick charts we put together for everybody so they understand what for the 2020 employment retention is. If you had a full or partial suspension and it was caused by a government authority due to COVID-19 and you averaged under 100 full-time employees in 2019, you calculate your costs based on the wages you paid to those employees and you get a 50% credit up to $5,000. Whatever dollar amount you did use, you do have to reduce from your PPP. So if you already filed for forgiveness on your PPP, you do have to subtract those wages that you were given for forgiveness. Then what happens in 2021, you end up being in this gross receipts decline of more than 20%. So in 2019, it was 50, now it's 20. So let's say 2019, you had gross receipts of $1 million for the first quarter, but in first quarter 2021, you only have $700,000 of gross receipts. You now qualify for the ERC. And so again, it's something we want to get out there to everybody because this credit is really hitting some staffing firms with some very large dollar amounts where previously they did not receive it under the old CARES Act, but when ARPA came out, it did come to fruition for a lot of staffing firms. So make sure you understand this, make sure you review it. We will get all the slides out to everybody, but it is important to note that this is a very big win for the staffing industry. Also, PPP is coming to a close. The final loans will be done on 5/31/21. If you have not applied for a round 1 or a round 2, I would encourage you to do that because PPP loan 1, as long as you demonstrated a 25% reduction in gross receipts, PPP 2 comes into play for you. Again, if you need it, you should go out and at least look at it and be able to go apply for that. Couple new updates that we're seeing on state conformity on the PPP. As you know, the federal government changed the way they were doing the taxation of the PPP. And what they did is many states came out and said, we are not going to allow you the same coverage that the federal government is. So these states as of 4/19 they were making you add back the PPP loan. Now, some of these states are currently in discussions of changing it. But right now, if you do business in any one of those states, when you are doing your forgiveness of your PPP on your tax return, these will need to be added back and you will have to pay tax at the state level. So just something to consider. Now, what else is happening, on where we're headed and what is this American Jobs Plan and the American Family Plan and what they're trying to do? Well, what they're basically trying to do is they're basically trying to add another $2 trillion of spending to keep the economy moving, and they're calling it more of an infrastructure plan, as all of you know. But in order to do this plan, something has to give. And in order for something to give, part of the problem is we're dealing with who the playmakers are right now. In the House of Rep, we have 212 Republicans, 218 Democrats, and 5 unfilled seats. And as we all know, the Senate is 50-50. And the only way something's ever going to get done right now is it's probably going to end up being a budget reconciliation process. So why is it important to understand what these numbers are and how something's going to get passed? Because here is what has been passed and is looking to be passed over the next 3 months. $10.2 trillion of spending has just been proposed, of which $6 trillion was already done. So we have $6 trillion of spending that has to be covered somehow. And currently the budget that's in place and the taxes that are in place will not under any circumstances cover this debt. So it's kind of like doing your own household debt structure. When debt is far exceeding the value of the assets, you got to increase the asset that's coming in. And so what are they looking to do? This is where the staffing firms could find themselves in some headaches. The first thing they're looking at doing is increasing the corporate tax rate to 28%. That 28% is a 6% increase compared to where it was. However, as a caveat, it is still lower than what the tax rate was previous to the Jobs Credit Act that they put in place. In addition, they are looking at creating what they call a minimum tax on book income. I call this the Amazon effect, because many of you know that Amazon and even Ford, GM, Chrysler, they have very, very high level R&D credits. They also have very high level what we call tax timing differences. And those tax timing differences are different to book. So when you hear that Amazon made $3 billion and then you hear they didn't pay tax, well, they didn't do anything wrong. They're just following the tax plan that's out there. So what they're looking at doing is they're saying is if your book income, if your financial GAAP income is X dollars, you will pay a minimum 15% on that so that you do not get to offset your book income with all these tax write-offs. They're also looking at discouraging all the offshoring of U.S. corporate operations, and then they're looking at strengthening global minimum tax for a lot of U.S. multinationals. Now, we do have quite a few staffing firms that do business in Mexico, Canada, UK, so Sweden, Japan, Puerto Rico. These are all things that are going to have a detrimental effect on how you price out and what your margin numbers are going to be. So now most staffing firms, though, aren't really C corporations. What most staffing firms are is they truly are S corporations, or what we call limited liability companies, or otherwise known as the pass-through entity. And what they're looking at doing is they are looking at taking the top federal tax rate on ordinary income up. They want to increase the Social Security earnings so that it continues to be paid at 7.65 all the way up to and above $400,000. They are going to tax capital gains at ordinary income. I will tell you that that one line right there, tax capital gains at ordinary income, has given the opportunity for the marketplace to really look at companies selling. I have never seen an M&A marketplace ramp up as fast as it has in the last 30 days since President Biden put this proposed legislation out. We currently are working on 5 staffing firms that we are taking to market to sell that had no intention of selling 35, 45 days ago, only because of that one line, is that they do not want to pay capital gains tax at 39% when it's currently at 20%. Now, I'm not telling you to rush out there and do that, because I don't like making decisions based on an if come or what the roulette table is going to fall on black for this week or red. I don't think that's a smart play. But if you had any inclination that you thought you might sell in the next year or two, this is something you want to really take a look at. They're also looking at passing and getting out of this pass-through business income deduction, the QBI. They also want to go back to the old ways where they're going to itemize our itemized deductions by capping it at 28% of our adjusted gross income. But hey, on the positive side, they're going to eliminate the $10,000 SALT cap. So as you can see, the personal income tax is really where they're really trying to hit hard. And while they say they're trying to hit hard on the upper 1%, I can tell you that the majority of my tax clients that we work with in the staffing industry, they are not the upper 1%, yet every one of these items here, with the exception of potentially the 400,000 earnings cap, they're all going to be, it's going to affect every one of them. Now, the biggest issue, and the area that we also wanted to stress with everyone on this call, is the estate tax. That is one area that we are 100% sure is going to take the hit at some point in time. They are going to reduce the estate tax exemption well before the sunset exemption. And by that, I mean right now, everybody gets a $11.5 million coupon, as we like to call it, that nobody pays any estate tax at $11.5 million. Well, that was supposed to go back to the old $5 million number in about 6-7 years. And they are going to remove that, and they are going to drop that number somewhere to between $3 and $5 million. And while many on this call may think it really doesn't affect me, if you were to put your staffing firm out to the marketplace and you sold it for $5 million or $4 million, you have a house that you have that's worth $300,000 or $500,000. You have a 401k that's sitting over $500,000. And you have some excess PPP funds that you'll be pulling out of your company. I can pretty much assure you that you are over the $5 million number and you have an estate tax problem. So the estate tax is definitely something you want to be working with advisors on right now. We are doing a tremendous amount of valuations on staffing firms right now for gifting purposes to get the stock out of the individual's hand and either into their family member's hand or into a charitable trust or some other type of vehicle so that they can protect themselves and their families from having to come to the table with a very large check to the IRS upon their death. The last part of the estate tax that is really, really out of whack in my mind is they're eliminating the step up in basis for inherited assets. And what does that mean? Let's say you have an aging parent and your parent bought their house in 1965 and that house was valued and bought at approximately $100,000. Upon their death, you would have inherited that house at whatever the fair market value was at that date of time. So let's say that house was worth $500,000 at that time. That means $400,000 of value passed tax-free to you as the heir. That is what they're taking away, is that in order for you to inherit that asset, your basis in that asset is what your parents would have paid plus improvements. And so upon you selling it, you now will have to pay tax on that $400,000 worth of gain. Oh, wait a minute. Now that $400,000 of gain just put you over the threshold for the capital gains tax, which means you're now paying capital gains tax at the projected 40%. So as you can see, this legislation, while he makes it appear that it's not that big of a deal, when you take a step back and start putting numbers or pencils to paper, you start seeing how this is really going to affect the entire middle class. And really, most of our staffing firms have a real serious tax issue potentially coming up that they were not recognizing. Now, it is estimated that $3.35 and $3.67 trillion over the next decade would be collected, which would literally be 1.4% of our GDP. And so that is an extremely high number for GDP that the tax alone would represent, almost 1.5% of our GDP. That's a very, very large number in my mind. Now I'm almost out of time. And that's why we put a lot of these slides in here so that we could have a good explanation for you. But this is the one for staffing firms I wanted you to understand, because staffing firms, if you recall, many of you are on a cash basis and not on an accrual basis. But for financial statement purposes and book purposes, you are on a accrual basis. So if you are a corporation doing over 100 million in annual income, this is where this tax potentially could come into play. I always tell people, just because you're not doing 100 million today does not mean that the magic wand won't be raised 2 years from now and that number will be dropped to 50, and then that number will be dropped to 20, because we all know that once a rock starts rolling down a hill, it gets faster and faster as it goes down, or we use the snowball analogy, the little tiny snowball that starts at the top of that mountain becomes a boulder by the time it gets down to the end of the hill. So I want you to all be cautious and be aware that these things you're seeing that you may think do not affect you today will definitely affect you down the road. This is the big one right here, where they do want to restore the top tax rate to 39.6%. Is it a big deal? If you change the SALT tax deduction, it really doesn't make it a big deal, but it does start squeezing people that are making over $400,000. And remember, as a pass-through corporation, you're not making just your wages, you're also making what that income is. And so you have to be cautious on that as well. The one I really wanted everyone to understand was the increase of the Social Security cap. I think it's important that all of you start understanding that as you're mapping out your compensation, as we've done compensation studies and we try to maximize QBI, this $400,000 is even going to become more important because they are looking at grabbing 12.4%, which is a portion from you and a portion from your company to make what they call that donut hole in Social Security so that they can grab some more dollars very quickly. Everything else on here we've done and talked about. The capital gains as ordinary income. We talked a little bit more about the income deductions and the pass-through of the 20% QBI. And as you see, they keep talking about this $400,000 threshold. However, as I keep trying to point out, that once they do it, it becomes a lot easier to move that number down. And that's why so many of us are really looking at this and talking to our congressmen and our House of Rep people and saying, let's really look at this correctly, because we all know what happens when we do this. So the last item I did want to talk about was the personal income tax, the cap on the SALT. If many of you are in multi-states, you know that you were limited to $10,000 on your state deduction for your federal taxes. That many states have put in some language that now allows you to deduct that as a business tax and not as a corporate tax. This is something I do see that will be changed. I do believe that they will modify this, and this will get passed at some point, that you will be able to start deducting more than $10,000. Everything else, we will let you guys go ahead. We've talked about briefly, I just didn't go through the slides, but they will be here for you. We do want to respect everybody's time. I do not see any questions or any chats in here. Is there any final thoughts, Claudette, you'd like to give before we sign off?
No, I just think that the information you shared is super important. Pay real close attention to the tax implications, what's driving risk these days, really topical. So thank you, Jamie and Kathy, for putting all this together. Hopefully the staffing firm attendees learned a few things today. So thank you.
Jamie, Kathy, any final words you guys would like to say?
Only real quickly, the only thing that jumps into my mind after looking at your presentation is, depending on your size and looking at the direction that insurance is taking, discussing captives with your agent really might make sense. Many people get into captives because the market goes crazy. It might be easier to start doing you can do an actuarial study for about $2,500 to determine if a captive makes sense for you. So something you might just kind of put a feather in your cap. Again, if you want to talk about that with us, give us a call.
Thank you. And I heartedly believe that the captive world's going to change again. I think you brought up a good point, because with the tax changes that are coming and potential increases in workers' comp, a captive may make sense. So yeah, that's a great point to make. We do thank everybody for being on the call today. We hope we provided you with some quick, snapshot value. We've all been in the industry for a very long time. And we've been through the ups and downs. And what I like to tell people is that if you keep yourself filled with knowledge, you make some very good calculated gambles, you look at what potentially is coming down the pike from everything you're seeing politically, socially, tax-wise, you'll be able to jumpstart your business and really propel yourselves. Because when I go back, and I'm sure, Claudette, when you've seen this with the firm you were at, when I go back to the 2007, 2008, the firms that jumped and propelled were the ones that really got knowledge and really jump-started and did and took advantage of all these things we're talking about today. So really stay tuned, guys. We're going to try and keep providing you with this type of information. It was a pleasure being with you today, and we appreciate everybody being on here. Well, one question I think just came in. Oh, they said it was very good learning on the numbers and taxation. So I guess we did a good job, guys. So thank you so much.